All right, David, you here? There he is, the handsome devil himself. Yes.
Yes, I am here. Sorry about that. There's chaos here.
That's how it is every day. I understand. I totally get it. So I was just talking, David. I was just talking before you joined
Oh,
in
I heard.
about all the uncertainty that's going on in the market and what's causing it. Today's topic is going to be actually, what exactly is a chip, and why the hell is it so important? But before we get onto that, before we get on the topic and talk about what's going on in the fund, the market is experiencing a lot of uncertainty right now. It doesn't know if there's going to be tariffs, not tariffs, how impactful that's going to be to the economy, whether we're going to fall into a recession. All these are unknowns, uncertainties. And until that's resolved, it's difficult for the market to move forward. We've had a couple of good years in the last little while. We've had a couple. 2023 was really good. 2024 was good. 2022 was awful. But after following 2 good years, and you get a bit of uncertainty like this, it is very normal to have a pullback. And I did a video, like I said, if you want to catch it up on YouTube, I can post the link if anyone hasn't seen it. But I did a video on whether we're in a bear market or a correction, and exactly what is the difference between those two. Bear markets happen infrequently, but corrections happen very frequently. A correction is defined as a 10% retracement from peak to trough in the market, whereas a bear market is defined as a 20% retracement or greater. So there is a distinction there. And generally speaking, bear markets are something that's accompanied by a recession, some sort of catastrophic economic event. Uh, Corrections are oftentimes very normal. They're pullbacks, profit taking. Something might spook the market out, like some geopolitical event, tariffs as an example, or potential tariffs. David, do you have any thoughts on what's going on in the market lately?
Yeah, I think what people have to realize is that coming into 2025, people were really quite excited by the election of Trump, the releasing of animal spirits, the rolling back of regulations, and a chance that wow, this is really going to take off. But he unfortunately he muddied the waters quite significantly with his tariffs and with his rather extreme positions that he was taking. So, and I think it's important to understand how uncertainty results in markets of scaling back or falling back. And basically, if you think about it, what I'm prepared to pay today to own a stock is based essentially, my future expected returns, income stream, price appreciation, et cetera, looking out. And so what I do is I use a discount rate. When interest rates were zero, what is the value of $100 10 years from now with a discount rate of zero? The present value is still 100 because there's nothing you can earn. You can't invest it. If the interest rates were 1%, the present value of $100 10 years from now is probably, I don't know what it'd be, probably around 90, 89 or something like that.
Mhm.
And that simply means that if I took my $89 and put them in the bank, I'd eventually 10 years from now have my $100. So as risk goes up, you have to increase your discount rate because that means that you need to be compensated for certainty of owning the cash today. And what Trump has done through his geopolitical posturing, okay, I mean, some of the positions that he's taken is extraordinarily, it's offensive on almost any level and in any universe. That's all I can say. His tariff wars, I'm not aware of a single economist who actually has an economics degree who actually believes that tariffs work. So what's happened is that he's found himself in a highly combative situation where he's created an extraordinary amount of uncertainty. And as a result, especially with stocks that are hyper growth stocks where they are definitely expensive, you significantly increase your discount rate, which means that the present value goes down because um, if it was worth $100 and your discount rate goes up, then maybe it should only be worth $80. So all of this risk, all of this uncertainty that's been created by Trump translates into a downward pressure because basically people, whether they recognize it or not, and this is an important concept in economics, the mere fact that you don't think that way doesn't mean that it doesn't describe how people behave on average. So all of a sudden, yes, everything being equal, greater uncertainty, implicitly we crank up the discount rate. And that just means that given the price of what it was yesterday, there's only one way to compensate for that, and it drops today. And that's what we're seeing. That uncertainty created by Trump means that, well, it is potentially a buying opportunity, but we'll talk about that later. But that's what's happening. And so we have to be patient. I do not know, and I don't really think anyone knows when this uncertainty is going to stop, because it's not clear. I'm not even sure it's clear to himself that he has a clear idea of what his real end game and goals are. What is it that he really wants to achieve? What's important? Fentanyl was not a significant issue for Canada. It was just a tool by which he could, beat up Canada. But why? What's so important? Really? Is he trying to be like the president McKinley, who was assassinated, and expand the American empire? I mean, seriously, we're really trying to do that in the post-World War II era? Apparently we are, but who knows? All that's done is increased uncertainty. Uncertainty for you, uncertainty for me, uncertainty for business persons making investment decisions, uncertainty for governments making procurement investment decisions. So everyone has to crank up the discount rate, which drops the price of all financial assets today. And that's terribly important. So when do you think the market's going to come back? When we reduce the uncertainty and we move away. And it's that simple. It's just that this path, this ride, is going to be messy because we're not out of the uncertainty. We don't really know what's in his head, if anything.
Yeah, now remember, guys, this is short term, right? The stock market, short term popularity contest, long run weighing machine. So short run, because of this, this could be providing an excellent buying opportunity if you have a long term time horizon, which we do. So we're buying right now. I'm going to start my screen share, David. Let's go over the presentation quickly, and we can talk about what we're doing in the portfolio as well. Right. Just verify if you can see my screen. See my screen? We're good. Yes. If you can see my screen?
Yep, I can see it.
All right, fantastic. Okay, guys. So it's a fund update call. We're going to see what's going on in the fund. All right. What's dominating? What exactly are chips? Okay. These chips that everyone keeps talking about, essentially whoever controls artificial intelligence controls the next century of economic dominance. Okay. That's why these chips are so important. There's only one company in the world that really can manufacture chips at the highest level. That's Taiwan Semiconductor, and that's in Taiwan. Now, there's another company called ASML, which is based out of the Netherlands. They come up with a lot of technology for manufacturing the chips. Now, companies like NVIDIA and AMD, they simply design chips. They hand it over. They don't actually produce the chips themselves. So these chips are really a bunch of transistors on a silicon wafer. That's really what it boils down to, right? Now, the more transistors you can fit into a smaller and smaller area, the more efficient that chip becomes, the more data it can process at a lower cost. So whoever can process this data at the cheapest possible price is going to win this artificial intelligence race. They are going to be in a position of economic dominance. Now, what's happening right now with tariffs doesn't affect that. That's still going to be in play. So that's essentially what these chips are. I want to talk about some of the companies, okay? It's a small wafer of semiconductor material that houses an integrated electronic circuit. Back in the day when you had computers that were the size of a city block, they had transistors. Those transistors were big. But over time, we have found ways to get these transistors smaller and smaller and smaller. Now it contains millions of microscopic transistors. And like, for example, Taiwan Semiconductor can produce 3 nanometer chips, meaning these chips are really, really small, like extremely small, the size of the transistors. Now, the more transistors, like I said, you can fit on there, the quicker you can process data. So, for example, if you were to be doing something like Tesla is doing and you're solving full self-driving, meaning a car that drives by itself, well, you're going to need the most efficient chips to go over all the data that you have. Now, Tesla has a few billion miles of data. That data needs to be processed. It also requires an immense amount of electricity or energy. Okay. Now, one of the reasons the tariffs might be coming on, and this is my thought, is that Mr. Trump knows who has the energy. It's us. It's Canada. We have the energy. We have a cold weather climate, and we have that control. Because we control the energy, we are essential for the American dominance to continue economically, anyways. Okay, so that's one of the reasons they want us to have an economic union with them. Fresh water, cold climate, and plenty of energy. These are all ingredients that are needed for these chips to be as effective as possible. So, for example, NVIDIA is not allowed to send their highest technology chips to China. Why? Because if China gets these chips, well, then they might win the artificial intelligence race, and America doesn't want that. So these are all things you got to take into account when you're looking at investing. But that's how important these chips are. When you're looking to solve a problem, okay, so if you want to have, you look at ChatGPT or something like that. ChatGPT is going to get better, faster, and cheaper, and it's going to be exponentially. Now, as that happens, you want to consume less energy, you want it to be more efficient, and as that happens, you're going to be able to solve more and more problems quicker, faster, cheaper. So it's absolutely essential. I was watching a video a little while ago that we shared in one of the coaching calls at Theta Trading, and think about this logically. There are about 10 nations in the world that have nuclear weapon technology. Okay, so it's pretty rare, but it's not that rare. It's much harder to produce the most cutting edge chips. That is much harder to do and is more infrequent than producing nuclear weapon technology. That's how hard it is to produce these chips at the highest level. So, does Samsung produce chips? Yes. Does Intel produce chips? Yes. But they are nowhere near the same level in terms of technology and efficiency as Taiwan Semiconductor. That is one of our major holdings. So chip technology advances has led to stuff like analytics, graphics, and right now it's artificial intelligence. Um, and they're in everything that we do. Everything. Microwaves, toothbrushes, TVs, cars, computers, your cell phones, they're in everything we do. And as we get more and more technologically advanced, they'll be more and more efficient. They'll consume less and less energy, and they'll be able to capable of doing much more. Okay. They're primarily used in the fabrication plants are the ones I was talking about. So ASML produces technology, Taiwan Semiconductor manufacturers, and the others like AMD, NVIDIA, they design. Apple also designs their own chip. So they'll design a chip, they'll give it to Taiwan Semiconductor and say, here you go. And Taiwan Semiconductor will come back and say, here are your chips. And that's how it works, okay? Anyways, semiconductor silicon passes through electrical conductivity that lies between that of conductive metals like copper and insulating materials like glass. So basically what happens is you have this thin sheet of silicon, and this laser imprints millions of transistors on it. And the smaller it can become, the more efficient it is. And that's how it works. So you can imagine how difficult of a technology that is to do at the highest level. Okay? But it's increasing faster and faster and faster. There's analog chips and there's digital chips. I don't want to get too much into it, but basically they're binary, and that's how they function. Quantum circuits and signal integrated circuits. Again, I don't want to get too much into the nitty gritty of it, but basically the bottom line is they are very, very difficult to manufacture. Extremely difficult. David, do you have anything to add here?
Quantum, I think the important thing here, they talk about quantum. Binary is pretty straightforward, as the name implies. It's, zero.
0, 1.
Therefore, the universe of possible combinations is defined by 0, 1. Quantum uses significantly more dimensions. As a result, the pairing is it's not exponential. It's almost infinitely more powerful. So if in the quantum world, if you're using, binaries, two states, quantum world, I don't know, might use 5 or 10 states, which just means that you can, the the ability to process information is extraordinary. The problem is they haven't been able to create stable quantum chips, because the whole point there is you're in the subatomic world, and while we know a lot about it, we're not masters of it yet. So, although I suspect it'll show up in the next 15 years or so.
Yeah, I would agree. And what some of these companies do, like Nvidia, for example, and why their chips are so. First of all, the chips are technologically advanced. Taiwan Semiconductor manufacturer, they have advanced design capability, and then they create software around these chips. So you're in an ecosystem very similar to what you would be in Apple, and it's very difficult to leave that ecosystem. You might be in AMD's ecosystem, you might be in Nvidia's ecosystem. It's the software that's also a differentiating factor. But I really want to hammer home again how difficult it is to produce these chips at the highest level. China can manufacture chips, absolutely they can, but they can't manufacture chips anywhere near with the same technology. So think about it as the Americans are driving a Ferrari and the Chinese are driving a
Ford,
a
a
what?
Ford, a Ford,
Sure, sure.
made
And
in Canada and United States.
right. And it's they don't go at the same speed. They'll get you to the same destination eventually, but they're nowhere near the same thing. And that's the big difference. And that's why the Americans are so hell bent on keeping this away from the Chinese and others. They want to control this entire next century of economic dominance. And in order to control that, you need the chips and you need the energy. Now, we did a presentation a little while ago on data centers. These data centers are popping up everywhere. Data centers are centers where all these chips are housed, and the data that you're processing, the artificial intelligence that you're teaching to, it's called a large language model. You're teaching it to behave and act like a human, for example. Okay, you have to process a lot of data. They're being built left, right, and center. They require immense amount of energy. Immense. We don't have the energy right now globally to be able to do this. We just don't. But you know who does? Canada. Canada has the energy. And that's one of the reasons I think that these tariffs are on. Mr. Trump, or President Trump, may be wanting to form an economic union so he has access to our resources to secure that level of dominance for the Americans for the next century. Now, there are different types of chips, integrated chips, system on a chip. And again, I don't want to get too much into this. Just the fact that these chips are getting more and more powerful and they're getting less and less costly. So Moore's law, it served as the primary driver for semiconductor advancements, predicting that the number of transistors on a chip would double every 2 years. So again, imagine 50 years ago, there'd be like 5 transistors on a chip. Now you have millions. And if it's doubling every couple years, well, think of how further ahead you are than someone who's 4, 5, or 6 years behind you technologically. They have way less transistors, which means their chips are far less efficient. Okay. Semiconductor companies may be simultaneously investing in alternative materials to meet the growing demand for smaller, faster, and more energy efficient chips. Because again, you're going to have to be processing more and more data. We're going to get more and more technologically advanced, and this data requires a lot of energy. So if you have a more efficient chip, you're not going to use as much energy. If you're not going to use as much energy, you can deliver a product at the end of the day that's cheaper and more efficient, and then you win the game. That's the idea, okay? Now, what exactly are we going to be doing? Sorry, just let's talk about what's next. Actually, this is fueled the rapid expansion of AI-specific chips, including GPUs and tensor processing units and other types of chips. These chips are engineered for specific purposes. They're not general purpose chips. Okay. want to look at the last line here. This advancement could bring us closer to a quantum economy with over $40 billion in public sector investments currently underway, as highlighted by the World Economic Forum's Economic Blueprint report. Okay. Now, in our portfolio, like I said, we are investing in some of the best companies, and these companies really, they don't have a lot of competition. Taiwan Semiconductor literally has no competition around the world. They control about 60% of the world's chip manufacturing, and they do it the best. There's no other company in the world that does it like them. They're the only ones functioning at this level. So can Samsung produce? Yes, but they're far inferior because they simply don't have the technology. This is one of the main companies that we're investing in. Now, I really want to make sure that you guys understand, in the short term, if a stock gets hit because of tariffs, it doesn't change this fact. It doesn't change the fact that Taiwan Semiconductor is the leader and has a huge technological advantage over its competition and will continue to be the leader for the foreseeable future. AMD, Advanced Micro Devices. Now, they're the number 2 player behind NVIDIA, but they're gaining ground. And as artificial intelligence increases, the need for the chips increase, we think AMD is really well positioned. AMD traditionally has been a company that's always played second fiddle. They did it to Intel, and now they're second fiddle to NVIDIA. But there's a nice market for second player. And that's exactly where they are. And then you have NVIDIA. NVIDIA is the technological leader, and they have something called CUDA, their software, which keeps everything in the ecosystem, in NVIDIA's ecosystem. NVIDIA right now currently cannot produce enough chips. They just simply can't. There is more demand for their chips than there is supply. And there's only so fast that you can produce these chips. One of the things that could be problematic, and we don't know how that's going to play out, is if there's some sort of geopolitical event. If, for example, something were to happen to the Taiwan Semiconductor manufacturing facility in Taiwan, you're going to have a global recession. Maybe even worse. It would be an absolute economic catastrophe. Because everything that we do has chips in it, and these guys are the ones who produce. They have a 60% market share almost.
Can I throw something in on that?
Absolutely.
My own personal belief is Xi Jinping definitely wants to take back Taiwan, and he is making arrangements to do that. But until the chip manufacturing capacity of TSM, or Taiwan Semiconductor, is replicated outside of Taiwan, he will not. Xi Jinping will stay away from Taiwan, because if he did attack Taiwan, the United States would actually have to come in and defend, because it's the only place they can get the chips to power their military. So it's a strategic requirement. So if you want to have a war between China and the United States today, the easiest thing to do is just have Xi Jinping attack Taiwan. Americans will have to come in and defend it, because otherwise their military is totally wiped out, because they haven't got the chips.
Yeah,
and that's
100%.
one of the reasons why they passed the CHIPS Act in the States, notwithstanding Trump saying we should rip it up. The whole point of the CHIPS Act was to subsidize firms like Taiwan TSM to come to the United States and build, and which they are doing, these new modern state-of-the-art plants, so that the supply of chips is away from Taiwan. Unfortunately, once that occurs, I think Taiwan is an extraordinarily vulnerable position.
Yeah, very good point, David. The U.S. military is so reliant, and the U.S. economy is so reliant on these chips from TSM, that if they don't have them, their military is going to be useless, and their economy is going to be wiped out. Not to mention also the global economy. That's how important this one company is. It's probably the most important company in the entire world, and that's not hyperbole. It literally is the most important company in the world. Now, what happens in the short term? Nobody knows. We don't really care. We're going to take advantage of this downturn because we know that this doesn't change anything long term for us. These companies are going to thrive long term. So if it happens to go down 20% or 15% or 30% because of some tariffs, well, that doesn't change anything long term. And this is how you make an absolute killing long term. By investing in these high quality companies that have a moat around their business when they go on sale. That is exactly what we're doing. So in these three companies alone, Our portfolio is exposed to it by 24%. That's big exposure. So here's our current exposure and our desired exposure. As you know, we only have 11 or 12 companies. We've got a nice little, well, we're getting rid of the Airbnb, which is a inconsequential holding for us right now, but it's Alphabet, Amazon, Apple, Microsoft, Tesla, AMD. Tesla's another one to talk about. It's been a bit of a problem with Elon being in the news and the brand really suffering some damage because of Elon and his antics. I wish he would just run the company, but that's not who he is. He's not going to do that. But again, I don't think it changes anything long term. They're still going to release a car that drives by itself. Their energy business has insatiable demand, and they're building new factories. They've got one recently built in Shanghai, another one scheduled to be built in Texas. That business should be bigger than the car business. So as much as people think of Tesla as a car company, that is not the reason we bought it. But getting back to chips, we've got excellent exposure to these chip companies, and we will continue to do so, even if the market goes down, because it doesn't change anything long term. So don't always pay attention to short term performance and, oh, my companies aren't doing well for the last 6 months or a year or 3 months. What is your company going to do long run? As Wayne Gretzky said, you don't skate to where the puck went, you skate to where the puck's going to go. So if NVIDIA happens to go down by 30%, which it just did a little while ago, does that mean we just drop NVIDIA altogether? No. Our job is to bring new money in there and continue to add to these companies. Until something materially changes, we will continue to add because we believe in each and every one of these companies. It's also nice we're adding to Bitcoin as it declines as well through IBIT. That's also nice exposure. So we've generated some pretty good premiums so far. We're about 90% exposed and 94% with our written positions. Now, the good thing for us is we continually are bringing in new money. And when you bring in new money, it allows you to take advantage of downturns like this, which is exactly what we're doing. So we're really excited about the future, guys. We think we're in a really good spot. Let us know if you have any questions. Last thing is, what does March bring? March is generally a pretty good month. On average, the Nasdaq's return about 0.6%, and it's positive 63% of the time. So just to recap, guys, just because there's a downturn, it doesn't change anything for us long term. And this is what separates good investors from great investors, from mediocre investors. Sometimes you just have to sit there and be patient. The banks may outperform you for 6 months, a year. Some other sector, energy sector, may outperform you. But if you believe in the companies that you're investing in, and you know why you're investing them, we just went over the chip sector. Is there a better sector maybe to invest in the chip sector? Maybe not. It's a great place to have money. So although the pullback looks ugly, performance-wise, this is one we keep adding, and this is what will allow us, we believe, to get great returns on a go-forward basis. And we just had a rate cut here in Canada today, this morning. Our benchmark rate's at 275, down from 5% at the peak. And the bond market's indicating also some rate cuts coming up in the U.S. We'll see how that plays out in the markets. But for now, we have uncertainty. We don't know. But this changes nothing long-term. We will continue to add, and we look forward to a very bright future. Let us know if you have any questions, guys. If not, really want to thank you for joining us. Let me just see if we have any questions.
There's